Long. Salute to you. I am J Revolution, and you are once again tuned into the informative podcast series. On this episode, I think it's one of the more important ones, especially with the way things are going these days. I have with me none other than Darren Jacobs. Now, this man is an insurance expert, not just by mouth, but by accolades. This year alone, he was able to secure 2 of the top 6 awards, which was 2 performance awards. He is dedicated to debunking all the myths that come with insurance, the negative press that comes with insurance, and aid people in their financial futures. He is totally dedicated to securing your future, building generational wealth, and educating people on the mysteries of money. Please give a warm welcome, wherever you are. I don't care if you're in your car, clap for Darren Jacobs. Darren.
Yes, sir.
First of all, let me give you a warm thank you for coming on to the podcast, for reaching out. I truly appreciate it because trust me, I tell you, I've seen your TikTok just on the feed, and but I'm not super active on TikTok. I'm not gonna lie.
Yeah.
As a filmmaker, it's really not my thing all that much. I'm not gonna lie, but from the moment I saw yourself, I said I feel like I have to check this guy. And when you commented, I said excellent. It wouldn't be no hassle to get him, and I really appreciate that he expressed interest in coming on the podcast. Now, sir, I've given you 1 minute, to tell me, because we spoke before, how you moved from being an electrician to jumping into insurance. Yeah, about 60 seconds. Go.
All right, so I'm a kind of guy, if it is I am not in consistent or constant motion, I tend to go crazy, right? And my career in electrical started off as a trainee in MIC. Went up, I got placed in Unilever, right? So I went from a trainee to a casual electrician. Then I moved from casual to A-class technician, and I realized it had nowhere for me to grow in a sense, right?
Yeah.
So from trainee to casual to B-class to A-class, I realized the only place after that is supervisor or manager, and that is a situation where is basically how long you're in the business, how long you're in the job.
Got you.
Right?
Not merit, but just time.
No, not merit, just time, right? And I was like, that not really working for me now, right? And I'm not going to be doing the same thing for 30 years and no kind of growth. So I looked, I moved from Unilever, went to Pilots Association, where I was the electrician in charge of all the vessels. So we had like about 18 or 20 vessels, and I was in charge of everything. Engine, generators, navigation. Once it's electrical, I fixing it, right?
Okay.
And then sometimes they would send me to Portland, where it is they would be building new vessels, and I would be looking at, let's say, supervising certain things, and then I more or less doing everything with electrical. So I was fixing everything and all. And then again, I realized that I'm in a situation where I had a glass ceiling, had nowhere really else for me to grow. So I started looking for an industry that I could grow in, and I realized sales was the one. So I used to read.
Sales, okay.
I used to read a lot, right? I still read a lot. So I read like about 100 books for the year. I listen to a lot of audio books, a lot of podcasts, a lot of things. So I always in the idea of or the space of personal development, right? And I realized insurance was industry that I can grow, where there is no ceiling in terms of how far you can go. No mind, there's no floor as well.
Right.
But
so okay. Now the minute passed a long time, but I'm glad you explained that because it does sound interesting. That the whole journey. So coming to the point where you realize sales was almost like a infinite ascension. So the thing is, insurance specifically. Were your reasons for leaning towards insurance fully genuine, or was it a bit of, all right, there's money to be made and there's also people to be helped? Tell me about your mindset in going, because sales could be anything. You could get commission from advertising, you could get commission from a lot of things. Tell me about insurance specifically.
So specifically for me, before I came into the insurance industry, right, some insurance agents tried to come and talk to me and try to sell me insurance.
Right.
And I wasn't really trying to hear them. Right? So a little background, I used to ride motorbike, right? I used to race.
But this guy is this is the most interesting man in the world. Electrician, motorbike. Go ahead, sir. Go ahead.
So I used to race professional, right, in Waterfield. And so I...
But you just said race professional or no?
Yeah, I used to race professional in Waterfield, right? So I used to ride every day to work at that point. And then I used to race professional, right? So a couple agents come and try to talk to me at that point in time, and they would see my income at the point in time, they would see my lifestyle, and then they would think, all right, I need to sell him everything, all the insurance policies I need to give him, right? And for me, I didn't really like that kind of vibes now. So when it is I realized, and in terms of me looking for professional development, and I realized the insurance industry is one where it is I can help people and really give them proper guidance in a sense, because I spent plenty bad money in my time.
Brother man. But I feel like one of my questions are definitely going to ask you, how do you bounce back from bad spending? But go ahead.
So I spent plenty bad money in my time, but I would say that if it is I had a little bit more guidance as to how to make certain money decisions, I would have been a little bit further, right? Yeah. If it is quote unquote, I was still in a 8 to 4 job, right?
Right.
Now, like I say, I didn't come from a family with money or nothing like that. So, you know, the normal thing, if this ain't come from money, you didn't really go have that conversation really with your parents in a sense, right? So nobody really talk about money in that kind of way now.
Yeah.
Now, for me reading plenty, I expose my mind to a lot of things. So that's how come I was able as an individual to get a certain level of enlightenment or understanding. And then when I came into the industry, I was like, all right, it kind of filled the gaps a little bit more, and I realized, okay, if I have this information here now, I can help people as well as pursuing my career goals.
Excellent. I had to mention that this guy is part of the $1 million round table, but we're going to get to that $1 million round table later. The purpose of the informative podcast series is to truly give people a sort of blueprint on navigating any topic, right? So let's start about insurance. Mm-hmm. We're talking about the types of plans you enter into insurance. The thing is, most people believe, I as well, kind of believe that insurance is not a scam, mm-hmm. but it's not something that I need in my lifetime. A lot of young people don't necessarily think about what happens after they're gone, because a lot of us aren't really seeing that kind of legacy money or that kind of generational wealth. Mm-hmm. So let's start with the types of policies that could truly help people during their lifetime. Mm-hmm. Not necessarily because a lot of millennials and Gen Z are not even thinking about having families, mm-hmm. because they're not seeing that kind of money, mm-hmm. not that kind of stability. So I think that's probably why insurance is getting a negative rap right now. Any kind of thing like that. So let's start with the type of, if I come to talk to you and I really don't care about after, mm-hmm. I talk about now, I want to invest some money now and I want to get some returns, not necessarily now, mm-hmm. but I want to get some returns in my lifetime, 5-10 years down the line. Let's start with that. So
it have, again, as you rightfully said, there are plenty different types of insurance policies, right? And it's really based on your needs, right? So let's say if I was having a conversation with you, right? Mm-hmm. And based on your situation, let me say the scenario is you not married, you don't have no children.
That's exactly the scenario. That is exactly the scenario. Continue.
I'm in the same scenario as
right,
well. Right. Luckily me. And so how I does operate when I talking to clients, right? If it is I wouldn't recommend something for myself or for my brother or my sister or my mother or my father, that's how I just look at my clients. So that's how I would base my recommendations. It's not to say that, all right, I just make a recommendation for you because this policy will pay me the most money. Mm-hmm. Right? Because with insurance, you get paid on commission based on your policy, right?
And I think that's why people think it's a bit of a scam, because you're not coming to help me, you coming to me to just make money. A lot of people feel that way.
That's what is going on.
And I say a lot of people, and I mean me too. Yeah, but go ahead.
And you see, dude, that is the difference, and that is what does kind of make a lot of my clients relate to me, because when I sit down and talk to them, they realize that, all right, that is the kind of headspace I own now.
Yeah.
Right? So, let me say for you, right, what I would recommend is a couple of things. So, firstly, a policy that would benefit you during your lifetime will be something we call an endowment.
Endowment, all right.
Right? And I make a lot of videos based on the endowment, because to me, there's a policy that could benefit benefit somebody while they are alive. You don't have to die to benefit from that.
Okay, well, take me through the endowment policy.
Right. So an endowment is a life insurance policy.
It's a life insurance, okay.
Right? But it gives the death benefit. You receive the death benefit while you're alive. So let's say the death benefit is $1 million, for example, right? And you set your timeline as in, you could set 15 years, 20 years, 25 years, which is 60, 65, whatever, right?
Yeah.
So let me say you set it to 15 years for argument's sake, right? In 15 years' time, you have $1 million. No tax, nothing. We giving you this full amount guaranteed, right? If in the event that you happen to pass away before that time, whoever is your beneficiary, they would receive it.
Is that better than me just saying, all right, for example, me just going to a credit union? Do you think that's better than me putting my money in a credit union and saving it in a mutual fund?
So you see, the credit, everything has its purpose, right? So the credit union have its purpose, right? But the credit union is not guaranteed in terms of the amount you would get,
right?
Because the credit union is not able to give you a projection as to in this time you will get this money,
right?
You understand? So with the endowment, if this is say $1 million is your figure, right? In 15 years, you will be able to benefit from that, right?
Right.
Now, it have a concept that I learned from my agent at MDRT. He was talking about.
By the way, that's $1 million round table, right?
Yes.
MDRT.
$1 million round table, right? Is where all the top agents in the world come together to share ideas, right?
Okay, excellent.
It's really only a half of a percent of all agents who qualify for MDRT, right? In the world, right?
And you have qualified.
Yeah. So
you understand? No, I have to big you up. You have qualified for. I know another guy who qualified. A virgin of mine, Jesse Peters.
Yeah, Jesse's my virgin too.
Right. Big up Jesse.
Mind you, we're in the same unit.
Right.
Yeah.
Big up Jesse. Yeah.
Right. So, back to what I was saying with the endowment now, right? So it come like, let's say, it have a concept called hybrid retirement, right? So when it is people talk about retirement, you talk about spending money in your retirement, right? But the pandemic has given us a glimpse into what retirement could be. Right. Because when everybody was home, in a sense, kind of come like a retired.
I guess, yeah. I suppose.
If it is, you want to look at it in that perspective, right? So, if it is you're spending during that time, it's not like you're saving towards retirement, you're spending towards retirement.
Yeah.
So, an endowment comes like you contributing to this plan for a particular period of time, and you could either withdraw from it, spend from it as you choose, right? If it is you want to put back the money, you could. If it is not, it would just deduct from the end. So let's say in a 15-year period, if it is you were to receive $1 million, right? And you say you want to go here or there or wherever, you want to
travel,
take some money to buy a house or whatever the case is, you could use some of the cash value in that policy to benefit from that. So for me, I would recommend that for most persons in our demographic.
And is that truly accessible? And what I mean by that is that if I say no, 34 years old, I want to start an endowment plan. What is let's talk hard figures here. How much would you recommend that I contribute each month to realistically get some good money in about, let's say same 15 years, because 15 years is I'm 50 something, right? Right? Yeah.
You see, it's all based on your income too, right? Because your income might be different from somebody else's income.
Yeah, absolutely, yeah.
So I would sit down and really make a recommendation based on all the expenses and all these different things and see like, okay, if it is you could afford X, right? Or if it is your salary is X and you have Y expenses, then my recommendation, and you're comfortable with paying Z, right? I would say, all right, based on that, let me go with that, and then I could work up the figure. So it's not just to say
it's a hard and fast figure.
A hard and fast figure now.
Yeah, because I know some people think that way. They want to know, all right, how much money I go really have to set aside for this thing to make sense. So I mean, I guess if you need to truly recommend it based on someone's expenses, fair enough. All right. I stuttering a little bit because I'm really not trying to come in hard on a negative tipper. I'm really not trying to do it on a negative tipper. What I'm really trying to ask is that because so many people believe insurance is a scam, you see people lean into things like Susu and CFX. No disrespect, CFX and Bitcoin and Forex and all these different things. Is insurance truly something that could lead someone to financial freedom? Because all these other things promise financial freedom, quick money too. Is insurance really something that could benefit the people? Like Talk to me about that.
Now, here the difference with insurance and all these different things, right?
Right. Phone for, like small thing.
My keys. Yeah. So what the difference with insurance is backed by central bank.
Right.
Right? Which none of these other CFX and these different things are. So you could guarantee that if an insurance policy states X, Y, and Z, it's a legal and binding document. Right?
But some for yourself. So people take note. Your Susus and your CFX. These people not giving you any. They say they're giving you guarantees, by the way. They say they give guarantees by the way.
No guarantee. It has no guarantee because if central bank not backing it, or if it is you can't go and say, well, X, Y, and Z, I could go by the financial ombudsman, right? What kind of guarantee you can have with these kind of things? And on top of that too, most insurance companies out here 100+ years. Right? So that alone should show you the stability of the company. Now the thing is with insurance, right? People will always talk about the negatives when it comes to insurance.
Yeah, they do.
A man go always say, well, boy, my father had this policy and sometimes I didn't pay and this and that and the other. But you can never hear somebody say, boy, you know, my father passed away and he leave $5 million to me.
Correct. Yeah.
Who gonna tell you that?
Correct.
Who gonna say I get $5 million from my father because X, Y, and Z happened, or my father had a critical illness and he got $2 million? Who gonna tell you that?
Yeah. No, because people want to be a little private with their money. But so has any insurance agent or any company kind of used that in their sales strategy when they say, look, these are real people who really benefited from having insurance? Why do you think that's not more widespread?
Yeah, because confidentiality.
Okay, right. Yeah, that answers the basic.
Like confidentiality, because how I gonna talk? Firstly, begin. Wherever it is you talk with me, that is confidential between me and you.
Right. Okay.
Right. I'm not gonna release your personal and private information to anybody. Right. Secondly, it's Trinidad we live in at the end of the day.
Yeah. You know. They don't want to talk your money talk.
Nobody want to talk that kind of talk.
Do you believe that there is a socioeconomic barrier to getting insurance?
For sure. That's exactly why it is I start my page.
Right.
The reason for having my whole tagline on my page is helping you understand insurance in a simple and easy to understand way. Right. And it's exactly because of that same reason. Plenty of people don't understand and they don't know and they don't know that they don't know. Right. So my whole page is get around helping you understand it in an easy way, not gatekeeping information, giving you ideas, how you could use this, how this could benefit you in real life. Right.
And in terms of affordability, do you truly believe that anybody could take out insurance?
Anybody.
The people who earn the least among us.
Anybody could take out insurance. Anybody. They have policies where I did a policy for a client. Her income was around 4,000.
4,000, okay.
Right? And I did a policy for her on average like around $100 and about $35, somewhere around that, between $130 to $180 something. Somewhere around in that coverage, that range, and the coverage was like about 300,000 or something like that. So that was about a couple times her annual income. So anybody could afford insurance.
Anybody could afford insurance. So even on a $4,000 salary, you could take out a policy. I guess that's why it's probably difficult to talk about insurance in a general sense, because you need to really sit down with somebody and get an analysis of what they have. All right, well then, let's analyze somebody like me then. I think this will now be a good way to really start to get some blueprint type information out there. So let me give my scenario, and I kind of talking about business, but also not kind of talking about business. All right, cool. So let's say I'm self-employed. Let's say that's true. I am self-employed. I have a guaranteed income of 8,000 per month. Guaranteed, right? Because I am on retainer with a particular company. So I'm guaranteed 8,000 a month. However, I have clients that are really giving me some heavy recurring business that would, and this is not real figures, so folks, calm down. That would skyrocket. That would probably send my income up to, let's say, 15, right? 15 above, right? So it's average. However, expenses,
right?
Rent alone is probably done 37 something. Let me say rent is 3,700. Internet, 300. Light bill every 2 months, 800.
Right.
I don't know if we taking notes. We taking notes? Let me take some notes. Let me take some notes. Let me break this down, right? So
maybe real.
So let me take some notes. Analyze me because you might leave here with a client. Because me, you never know, right? So let me analyze me and help some people. Let's analyze me so we see if we can help some people. Let's analyze me.
Right, yeah.
And I feel like that's an excellent idea. So the guaranteed income is 8,000, right?
Mm-hmm,
Guaranteed is 8,000.
Mm-hmm.
Because I'm self-employed, obviously, I'm not settling for 8,000.
Mm-hmm.
Based on my current trajectory, I would say that lowest end, I would bring in 15,000 a month.
That's the average.
Yeah, that's lowest end. 15,000 on a like because that's just 7,000 more, correct?
Mm-hmm, mm-hmm.
Right. So that's on a kind of a month where I get 1 or 2 extra clients.
Right.
Nothing big. Right. On a great month, we pushing 30 plus. Right. On a great month. Right.
Mm-hmm.
Now here we go. So let me use 50. Let me use 15.
Mm-hmm.
15,000 on a bad month. Right.
Mm-hmm, mm-hmm.
15,000 on a bad month. Right? Rent, 36. Right? If light bill is 800 every 2 months, then put 400 a month for light bill, right? Internet is 300. Phone bill is 300. Right? And groceries could be 1,000 plus. I try to keep my food bill. So let me put food bill. Let me put food at 2,000 now. Just put food at 2,000 just to be safe.
Mm-hmm.
Right? Now I am not married. I have no children.
Mm-hmm.
I know gal. Nothing.
That a claim.
Nah, it's truly nothing.
Right.
And I would say this. Just at the back of my mind, I recently found out that I have hypertension.
Oh, okay.
Right? So I am taking a real serious look to my health. So at gym, 300 to that.
Right.
Gym 300. 350. What am I talking about? 350 is gym.
And here, that's not before you go. Here the thing, that has happened to plenty of people. Plenty of people does they would have a particular ailment and they wouldn't realize it only until we come and do.
Because something happened this year that made me realize that I got it from both. Now, physiologically, I did a whole bunch of tests because physiologically I'm fine.
Mm-hmm.
But at the end of the day, it is what it is.
And that's the next thing too. You see, if it is let me say you're in your, let's say 30 and above, right? I would say at some point in time, do a full medical.
A full medical, yeah.
Right? Do a full medical because a full medical will show you exactly where you are. Because you might think you're healthy, but
correct.
You only then when you do the full medical, you realize, hey, I have this, I have that, and you might really understand that.
Yeah, sugar is fine, cholesterol is fine.
Yeah.
Stress echo test, all kind of thing I do because I put out a video about it. So this is already public knowledge, right?
Mm-hmm.
I put out a video about all the tests that I did, and everything is fine.
Mm-hmm.
So it's a matter of dealing with stressful situations and having high blood pressure. So I take a real serious. So say this one drink, that is it.
Mm-hmm, mm-hmm.
That is it. You know what I mean? But this, I would think this is a good rundown for me right now. Now, this, to be real honest, is not the situation with plenty creatives.
No,
it
isn't.
Not. Right, but this is where I'm at, and I'm looking to do even better than that as time goes on.
Mm-hmm.
And of course, these are just average figures, people. This is not my money to be pocket watching. You see, so not psychoanalyze, but analyze this and tell me, really and truly, what kind of contribution I can make monthly to for me to benefit from something during my lifetime within the next 15 years.
All right. So first and foremost, let me say, after I sit down and I work out how much your expenses is, you have a disposable of basically like around $8,000.
Yeah, that's only the month I'm bringing in 15 and that kind of.
Let me just say for argument's sake, right? You have a disposable of $8,000, and knowing that the fact that you say that is not a consistent every month. Correct, you would do that. Because obviously some months you would make
some
more.
Some better, some will be worse.
Some will be better, some will be worse. I would even use the average as 8. I use the average as 4,000 as your disposable.
There we go. Okay.
Right. So let me see if it is I work with a budget of 4,000. Now the kind of agent that I am, I still not even gonna take that whole 4,000.
Yeah.
Right. So what I would recommend for you off rip is critical illness coverage.
Critical illness, okay.
That will cover things like heart attack, cancer, stroke, major organ failure, benign brain tumor, major burns, blindness, paralysis. Is about 21 major illnesses.
Right.
Right. That is what I would recommend for you off the top. Right. Because for me, I can't really I just feel bad when I see somebody have a GoFundMe or they have a fundraiser for a barbecue or they have a boat ride where they're trying to raise funds for, and it's like if it is all you only had a little coverage, you could maintain your dignity now. Right, so they didn't really have to go through that. Now, obviously, in some cases, some people mightn't really be, they might have the information, but if you have the information and you never really act on it, that is your fault.
True.
Right? So, critical illness coverage off the top, right? So, let me say 500 at minimum is what I would recommend for people.
Okay.
Right? And again, if it is you could afford it, that is the baseline I would recommend, right? 500,000 critical illness coverage. Normally, let me say like $1 million is fine, because $1 million you could more than get what critical illness does. How it does work is that upon diagnosis, this $1 million would pay out to you, right, full amount. So you could choose now. All right, I'm gonna see about my medical issues. If there's I want to see about it here in Trinidad, anywhere else, wherever, that's your money to see what it is you want to do. If there's want to take that money to finish pay off your expenses, any outstanding loans, you could choose what it is you want to do with that money, right? So that is that critical illness coverage. Second thing, income protection insurance, right? You as a creative, if it is you not able to work, or you're not able to go to work, or you're not able to sort out certain things because of an illness or because of an injury, a policy like this will pay you.
This is city policy again?
Income protection insurance.
Income protection insurance,
right? So different companies have different names for it, right? But if it is, I shameless plug, I work in surgical. So
yeah, make up surgical, you know?
Right? So it's surgical income protection. The name of the policy is SIP, right? Surgical income protector. Right? And this would pay you on a depends on the type of illness you have or the type of injury you have. It depends on a weekly basis, right? So like let me say if it is you're a creative, right? And on set you happen to the trainee was supposed to do something, or it's supposed to secure the tripod, right?
Yeah, some fall,
and it fall on you, right? And they get injured, right?
You know, funny enough, I actually have experienced that, where I got an injury and I had a walking stick, couldn't walk well at all, and I couldn't work. I was leaning on a walking stick to do some, and a lot of things happened negatively. So, and I was in my early 20s, so you know,
pressure,
and it was pressure.
Yeah.
So it happens. Yeah, go ahead.
So in a situation like that, right, you injured, this policy would pay you on a weekly basis. So if we say we work out the figure for you, and your figure based on your annual income and based on a couple different parameters, let me say we give you $1,000 per week, right? This policy would pay you $1,000 per week until it is you get back in full 100, where it is you able to see about your day-to-day.
That has to be based on a timeline. That can't be indefinite.
The timeline is based on so let me say is if my math's correct, let me say is, if I'm correct, is about 2 years.
2 years, okay.
Right? 2 years based on the injury. And if it is you're sick for more than 30 days, right? It will pay your weekly income as well too.
Right, okay.
Right? Also, if it's in the hospital, it will pay. Yeah. So let me say, for example, you're a creative, but you just ride bicycle.
Which I actually do. Jesus, yeah.
Right.
Bro, I used to ride a 20 miler.
Right.
Yeah, most normal.
So let's say you're riding and a dog run out in the road and trade down. Yeah. Right? And you injure your foot or your hand or something like that, right? And because of that injury, you're not able to work for a particular period. A policy like this would pay you.
And of course, that would be also based on doctor's recommendations.
Of course. Yeah, so you have to submit your medical records.
Right, of course.
Right? So once you submit your medical records, you're safe.
Right. So far for me, it's a critical illness and the SIP.
Right.
I'll tell Surgical change their name because I don't know, this community is when somebody dead, they say SIP. I don't know where they get SIP from.
It's SIP.
Yeah. No, that was a SIP, sleep in peace. I don't know why rest in peace sounded fine, but they had to say SIP. So let's Surgical know. But still, so we have the critical illness and the SIP.
Right.
So how much is that? I'm paying 500 critical illness and then I'm also paying something else for the thing. Or this is two different things.
It's two different.
It's one or the other.
It's two different policies working together.
Okay, so I'm at 500 And for the SIP, so much?
No, not $500 enough.
Yeah.
$500,000 was your critical illness coverage.
No. When I say, I mean my monthly contribution is what I'm talking about.
No. Your monthly contribution for the $500,000 in $500,000 critical illness would be somewhere like around $200 some dollars enough.
Woo! It's a good thing you say that because when you say 500, I thought 500.
No.
Well, no. So 200 and something.
Yeah, like around two something
for the critical illness.
Yeah.
A contribution a month. And how much for this SIP? How much
This is based on like we say if it is year one till you can have a SIP for as low as probably like about $50 something.
No. Put the SIP up to 200. Put the SIP up to 200.
All right. So let me say for argument's sake, we're using a figure of $200.
Yeah.
Actually, let me get a better figure. I was doing one the other day for a client, same kind of age demographic.
Yeah.
Right. And it come to like about 169 or something. So.
All right.
Right. So there's 169, and let me say for the critical illness, it's like about 230 or something like that.
Right. So 230 plus 169.
Right.
All right. So
right.
we are 399 now.
399, right? And let me say for you, if it is you want to look at the endowment where you're talking about, which is, in all fairness, is my favorite policy.
Right.
Right. Let me say if there's you're looking at in a 15-year period, in a 15-year timeline. Let me say because you're a creative.
Right.
I would use the endowment as a retirement benefit for you.
Okay.
Right. Because you don't have no pension plan.
Right.
Right. So for somebody like yourself,
start paying and yeah. Leave it at that.
Trinidad.
Let me leave it at that. Yeah, go ahead. Yeah.
So let me say for you, I would say we do a endowment, right? And the endowment come up to like let me say like $1 million or let me say like $750 something like that. You might pay if my maths serves me correctly. Or if you said I don't have the figures in
No,
front
that's
of me.
fine. That's completely fine.
And
We understand these are averages.
Averages, and each person based on the age and the gender would vary, right?
Right.
Because a woman might pay less than a man.
We'll jump
I'll
into
get
why
to
that is after. Yeah,
right?
yeah.
So let me say, for argument's sake, if this year want to say you're contributing $1,000, right, towards an endowment, that might give you like around, let me say like about $750 $1 million
Okay.
at age 65.
Okay. $750,000. Okay. We will use the lowest figure. $750,000 for $1,000 a month.
Yeah.
Right.
Yeah.
So you could basically say set aside $1,400 in savings, and you're kind of good.
You're more or less good
You're
day,
more or less good day.
right? Because you're getting life insurance coverage, you're getting critical illness coverage, you're getting income protection coverage, and as well as you're getting the endowment benefit at age 65. Right? Now, mind you, if it is you had children and your needs was different, I'd recommend something like a term policy.
Okay.
Right? Term insurance is like renting a car,
Yeah.
but you have plenty coverage for a little bit of money.
Right.
Right? So like, let me say you could get like 1.5 million in coverage for like around 2 something, if so much.
All right. Well, we have answers to that. That sounds pretty manageable, to be real honest. We gave some tips to that. So I'm happy. This was actually a great exchange because people might be listening and say, okay, I could afford one something a month. I could afford to something. Did he say $50 something a month? I could afford that. So now I want people to really start thinking about insurance now. So that is covered. I feel like we have good information there. Let's step into a few other thoughts now.
Right.
Are there realistically any drawbacks? If I were to do this now, are there really any drawbacks? Will I really be losing anything if I do cash out on these? I mean, I'm cashing out on my $750,000 for sure. But these two others, if nothing happens, do I really lose?
Yeah, you're driving. Yeah, you have a car, right?
Yeah.
All right. Your car has airbags?
Yeah, I mean,
right.
bags, eh?
If it is you never get an accident and deploy airbags, do you really lose anything?
Well, of course not, because you're paying for you buy a car, expecting it will come with that feature, right? However, I will say this. I not invested in I invested in my car for a reason, or a transportation kind of reason, back and forth, right? It has given me that. The airbags now are a what if. So granted, I don't lose anything. The car has technically kind of served this purpose. If I put all this money into insurance, people might start to feel, I'm going to spend this money on a little vacation, a little double palm. I see your shirt has 2 palms on it. People feel that way. That is what I remember a comedy routine by, I don't know if it was Chris Rock, where he was talking about insurance as a big what if. And then he asked, what if nothing happens? What happens then? So this is what I'm saying. With these critical illness and these life insurance policies, is there really a drawback? Is that people who think that way? I need you to talk to the people now who thinking, Dread, if nothing happens, this is a waste of time.
So
school these people.
Here the thing, right? I do have a video the other day, and this is an idea that I get from $1 Million Roundtable, right? They talk about probability and consequences. Right? So when it is a guy in your car, you just put on your seatbelt for the probability of getting into an accident or the consequences of getting into an accident.
Well, yeah, obviously the consequences, yeah.
Right.
You don't want to fly out your car.
Basically, right? Insurance is the same thing. I cannot help you with the probability of getting probability of you making a claim or you having a critical illness or you having an issue, right? But I can help you with the consequences of that issue.
No, fair enough. And I think people understand that. So the question is if I take a critical illness policy and let's say nothing happens, could I, which would be great. You're not getting sick. That's great. Is that something you could pass on? You could get back money from it? What is
so how these things does work, right? Is if it is you take out a critical illness policy, right? So you never make a claim. It have some critical illness policies that give you a return on premium.
Right.
So all the money that you would have spent, you get it back. But that is not all critical illness policies. Right? That is some of them. Now, in how I justify it in my head for myself is I rather spend that money and not need it than need it and not have it. Right? Because if it is something can happen to me 5-10 years down the line, I ain't gonna feel as though I'm invincible all the time.
Correct.
Right? I might be 33 now, right? And I might be feeling strong and invincible and nothing gonna happen to me. I'm not gonna get sick, right? But let me say today or tomorrow, if I do, right? I know, are you gonna see me on a GoFundMe?
Yeah, I mean, and question, critical. The word critical is kind of self-explanatory. But if let's say, for example, what happened to me, like I said, once again, is public knowledge. One day I just felt some weakness on the left side of my body. That's bad news. And I started to do a whole bunch of tests. Would it have covered that? Or?
So you see, people misunderstand the different aspects of insurance, right? So that when it comes to that type of insurance, that critical illness, it have income protection, so that's if there's a guy injured, that kind of thing. And it have health insurance.
Okay.
Right? So health insurance is like, it's like if it is you getting to you have to go by the doctor, the dentist, right? So there's the health insurance card here, right? It's the carry care card. And with this card here, if it is you have to go...
I'll pay there. Right.
Yeah, so there's the carry care card, right? So with this health insurance card here, if it is you, let me say you have to go by to go and do the same test that you have to go and do.
Right.
That will fall under preventative care. Right? So this would cover it, right? Whereas this would work 80-20, right? So the company would pay 80% of the bill, you paying 20%.
Right. Okay.
That's how health insurance does work.
Yeah. So now I'm feeling like critical illness, yes, but health insurance songs.
Yes.
It sounds less of a it's less of a what if now with health insurance. That's just how it sounds. I mean, with further comment, we can't get into everything here, obviously, because. We'll have to really talk more facts and more figures and that kind of thing. No. But from what I'm hearing, just sitting down, I'm like, okay, health insurance sounds like a must as well. So how about we add... add health insurance to our 1,400. So
that's now.
Hold on.
With health insurance, right? Health insurance as an individual could be very expensive.
Okay.
Right? No. And it does have to
I appreciate that you admit that.
Yes. And
honest salesman, right?
And you just have to pay health insurance annually.
Okay.
Right? So if it is you by yourself, it could be one figure. If it is you have kids, it's our next figure. Wife, our next figure. So
and is it more? I don't want to say reasonable, but is it better if the more people on the policy? Or you're paying more money as there's more people.
Here how I does explain health insurance, right? Or here does how people understand health insurance. If it is you work in a corporate job and you have the opportunity to have a group health insurance plan, take it, use it.
Right. Okay.
Right? before I was working surgical, the company I was working for, I used to make sure and use my dental benefits. I used to make sure and use all the benefits of this health insurance policy as much as I could. Right. So, and you're paying with a group health insurance plan. You're paying small money, like a 2 something, 3 something per month. Right. So, what I just recommend to people, so now it's not for everybody, right? The benefits does vary a little bit, but if you have the opportunity to get a group plan, you can save plenty money.
Literally bring a group of friends and take out health insurance?
No, it don't work so.
Okay, I had to make sure. But as if if you're working for a company and
so
they have
you can have that 2 ways to get a group plan. If you're working for a company, or if you take a group plan through like a credit union or something like that.
I didn't know that.
So if it is like we say it have plenty credit unions you might be a member of, right? And this credit union have a group plan, a group health plan, right?
You recommend that?
You will save real money. You go save real money. And the good thing about having the credit union having a group plan with surgical is that again, shameless plug is
go through.
When it is that card itself, right? It does automatically see about the claims process.
Right.
So you swipe your card and you automatically everything gets sorted out at one time, right? Once it is you within the network. If there's you out of the network now, you have to come now and pay the full amount, right? And then submit a claim. But you'll still get back your 20% your 80%, sorry. Because the company pays 80% and you pay 20%.
Right.
So in and out the network, you still save. Yeah.
All right. Okay. I feel like that's easy to understand. And that's interesting. I didn't know that. So thanks for the information. All right. So we moving into the tailor now. I wanted to ask you, I saw a lot of your videos. By the way, plug your TikTok, by the way.
My TikTok is Darren Jacobs Financial on all platforms. Right. Instagram, Facebook, LinkedIn, TikTok, everything.
Yeah. I mean, it'll come up in your lower third and everything, right? So I'm saying that to go into, you were talking about building generational wealth. Now, there are a lot of think pieces and not just theories, but facts and thoughts and all these different things about wealth. And it seems that for the average person in this day and age, attaining wealth is going further and further away. Housing market, it ain't slowing down.
No.
People studying for a lot of a good chunk of their lives and can't get a job. You made a video talking about if you were to invest a certain amount of money in a particular plan, when you reach a certain age, in $1 million, and that's the start of generational wealth.
Right.
Is that truly realistic? Because I believe that really attaining wealth is through ownership and those different things. And that's our next question I'll ask you. But were you saying that just as a salesman to get people kind of hype, or is this something that you really have seen, you believe in, you could back it up with facts and figures? Talk to me about that statement, because I'm interested in hearing your thoughts on that.
So I believe in that, right?
Right.
And the thing is, not everybody might be in a situation where they could buy a house.
Right.
Some people might be able to purchase a property because of many different reasons.
Yeah.
Bad credit, bad history.
All these circumstances they're just born into.
These circumstances they're born into, them had to rent, whatever the case is, right? So not everybody might be able to buy a house. So I made a video about renting versus buying a property, right? So if it is you buy a property, right? You have mortgage to pay. You have plenty different expenses that accumulate, that are associated with owning a property, right? As opposed to renting. If there's you rent now, your rent might be, let me say 3,500, whatever the case is, right? Yeah. You renting. So you're paying 3,500 for a property you're renting, and let me say your mortgage is let me say for $1 million mortgage, that monthly installment might be like about 7,000 something. Right. That's the average mortgage. Yeah. Right. 7,000 something in a mortgage. Right. Now, yes, there is an argument where you could say that property building in equity. Right. And if it is your children, you're able to pass the property on to your children. Right. Now, have a next argument where you could say, well, if it is your children, they want to live in the property. right? How it is they getting the money, right? How it is they benefiting from it? If there's you renting now, you could say, all right, the difference in that money that I would have been spending in mortgage, I could take that same money. Now, this is an unpopular opinion, right? I could take that same money, put it into something like an endowment, right? And end up with, I think I had worked out the figures in a video.
Yeah.
You end up with like about, if there's you and your wife, you put together the funds and you end up with like about a 3.3 million in your hand.
Because you were saying that this is like two people who income 10,000 a month.
Yeah. So like let's say two people, 10,000 a month, they're renting, right? At age 65, them getting 3.3 million or whatever the case is, right? That 3.3 million now, you could use that and do plenty different things. You could, that is your
you could still buy a house.
You could still buy a house.
Yeah.
You could buy a rental income property.
Yeah.
Right? You could retire with that comfortably. You could get your children a piece of money. Because I sure you at this big age here, if there's your parents come and give you a little $2 million, $1 million, you really get through.
Yeah. Well, that's not going to happen. But big up moms, because she's fantastic and she's this one I wouldn't be here with where I am without her. But everybody born in different circumstances are probably not clocking no million. But yes, absolutely. If you get $1 million, I wouldn't say it's straight, but that'll be fantastic.
It's a good start.
A lot of people would never probably see $1 million.
No.
In lifetime.
No.
All right. Well, I understand that an endowment plan might really be a stepping stone to gaining wealth. So, man, so insurance over a credit union, you would say?
It has the credit union has its uses. Though, no, I'm not saying insurance over credit union.
Okay.
Yeah, because you see, it is different purposes, right? Credit union is for short and medium-term goals. Insurance is for like long-term goals, right? So if there's like you want to save to buy a car, you get a loan, that kind of thing, credit union, Right.
Got you. I'm glad you honestly explained that. So next thing, does the insurance industry ever act as, let's say, brokers for, if I really want to invest, like I'm talking real invest, not just hand a company money and they give me these figures of guarantee returns based on how aggressive the portfolio is. I'm talking about really saying I want to grow my financial portfolio. So my insurance is covered. Bro, I come to you and I say, bro, I really want to really get into the stocks. Not just hand somebody the money and let them do whatever they want, make even more and then give me back a little small piece, which is what they say banks and insurance do. They take our money, invest it and give us back a little some percent. Every time I watch any video about wealth, they always say, look, ownership is the way to wealth. Do insurance brokers do that? So really put me onto the real plug?
You see, the thing is, right, when it comes to stocks and thing, right, that is not the role of an insurance company.
Okay, fair enough.
Right? So, like, an insurance agent doesn't tell you how to make money. An insurance agent tells you how to protect what it is you have.
Got you.
Right?
Okay.
So, that is the difference.
Right. These are the kind of questions I have. This is me just asking the questions because I understand this is all banks and insurance.
No, the thing is, right, I can help guide you. Right? Me being a financial advisor, I could help guide you.
I guess that's the next question I want to ask. Do agents sometimes act as financial advisors to really say, okay, you could probably try this and try that? Okay.
So now the thing with being a financial advisor, right? In order for you to actually call yourself a financial advisor, you have to have certain designations. Right. Now, the designation for you to have to say is an actual financial advisor is CFP, Certified Financial Planner. Right. Very few insurance agents have that designation.
Okay.
Right. However, because agents, so like right now I'm doing I'm in the last module of a designation called FSCP, right? Financial Services Certified Professional, right? So based on that, I would have been exposed or been trained on many different areas as it relates to estate planning, retirement planning, financial planning, different things, right? So I have the designation, but legally I can't call myself a financial advisor, but I'm still able to give you pertinent information that you will not be access to.
Right. So next time I see anybody talk to me about Forex or Bitcoin, first thing I'm asking them is, do you have your CFP? No comment.
The thing with Forex and Bitcoin is here the thing with no knocking people on the hustle.
I knocking.
Right? But
I knocking.
Me personally, I stay away from that because I don't like to lose money.
Right.
I don't gamble. I don't like to lose money.
No, but again, they kind of do the same thing. They don't put you directly. They take some of your money, they do what they have to do, and they give you back some. So they're going against the banks, but they pull a bank model. So I asking you for your CFP, yeah? Don't feel I don't asking for your CFP.
Nah, them is you see again. You can't ask them fellas for that because
I asking them for that.
Them fellas and them is again them pushing their product, right?
Now the product is the hype, is the lifestyle, is the perceived lifestyle.
And that's the thing, that's the thing, right? Here the difference with again, I'm knocking what them fellas and them doing, right?
I knocking you though.
You don't see no insurance agent pushing big on this
glamorous
lifestyle. Now, mind you, it plenty. Insurance is a very well kept secret in terms of as an individual building wealth, right? Because not to be too thing. It are plenty agents who are extremely wealthy, right?
Right. Okay.
And that is from being in the business, right? From helping people, from doing business insurance, from doing different kind of things like that, right? But you will never see an agent pushing that kind of lifestyle. Come and buy with me because I doing this and that.
Yeah, this and car and this house and that kind of thing. Yeah.
I could be doing however well and I could be on however I win how much ever I was. Whenever I meet with that client, I don't ever lead with that, right? Because I had nothing to do with you. I lead with you with how, with my expertise, I'm able to help you reach X, Y, and Z goals and whatever. So what is I doing? That is never in the conversation.
Got you. All right. Well, I feel like this guy, Mr. Jacobs, and I will have another conversation at some point. I feel like I'm going to have a chat with this guy about not just financial planning, but we on the full-time network is about spreading information, we're about education, and who knows, this man might appear in his own series. You never know, right? So I would like to thank you once again. It's Mr. Darren Jacobs, certified insurance agent, award winner. The man is on the $1 Million Roundtable, so he knows what he's talking about. He leads through example of his own successes in the field. And I must admit, this is no gas. You have shown me a couple of things that I just didn't consider and things that I'm starting to consider. I big up my boy Jesse. I know my boy Jesse. I tried to get him in, but I was at a different point in life. I'm sorry. It happens. Big up Jesse. But
Jesse's my boy. Big up Jesse.
Big up Jesse. It happens.
Jesse Peters Financial. You can check him out too.
Yeah. Big up Jesse. I might have to call Jesse on. You never know. But thank you so much for coming through. It has been an absolute pleasure.
Happy to be here.
I'm sure based on just my situation and the things you call out and the affordability of the policies they call out, I definitely believe that somebody learned something from this podcast.
And you see too, the reason why this before just to close off.
Yeah, of course.
Me coming onto this kind of program here, sharing information is really all why I'm about it.
Right.
And this is exactly the reason why it is I starting to push a lot of this kind of content on social media, because what I realize a lot of agents do talk about these things openly. Right. A lot of agents do share this information. Not because they don't want to, but because insurance and social media is a kind of...
Yeah, it's funny. It's funny. It's still emerging. It's
an emerging market. Yeah. So for me, I realized that, hey, nobody else is doing it. And I have a blue ocean. I could come and do this. And I could kind of blaze the trail in a kind of way now. Yeah. So I kind of really doing this to really help everybody else, help people understand what and how it is they could benefit from this. And more or less help push my career in a direction where it is I could be known as a thought leader in this space. So if this you want to hear about insurance, come and check your boy.
I don't know. So I would like is this your first podcast of any kind?
This is the first, but definitely not the last. Trinidad! Expect to see me here again.
Yeah. So I mean, and I hope that other media houses call you for good info because they have good information. You know what I mean? So I'm happy to have premiered Mr. Darren Jacobs, insurance agent extraordinaire, on the Informative Podcast series. Don't forget, we are available on Google Podcasts, Apple Podcasts, Spotify, and the video version is available on YouTube wherever you're watching. My name is J Revolution, and don't forget, always go beyond the tip. Thank you very much for watching and listening.